This is the Think Podcast for entrepreneurs, business owners, and real estate professionals. Insight, real talk, systems that scale. Think about it. This podcast is brought to you by Real Property Management, the largest single-family rental residence management franchise in North America. We help you protect your investment, minimize your costs, and maximize your income. Visit realpropertymgt.com to learn more.
Thank you guys for joining for another awesome edition of the Think Podcast. Really lucky today to get him because he's always going a million miles an hour. But our guest today is Rob Napolitano, who is also a Think contributor, and he's a resident expert with us here at Think. And so just love Napolitano's take on what he does because he's always going to give you the truth. And so the topic for today's podcast is the reality of what the market is, where we've been, and the opportunities kind of going forward, because he's going to lay it out for you. And if there's anything about Rob Napolitano that I can tell you is I go to him often when I have to get a question about the real meat and potatoes of a situation, because he'll give it to you, the good, bad, and the ugly. So Rob, welcome. Thank you for this, because I know you're busy. You're down there in Charlotte just crushing it right now. So for the listeners that don't know, talk a little bit about Horizons Capital Management and kind of what you've got going on, and then we'll get into the meat and potatoes, as you always say.
Thanks, Scott. I appreciate it. I appreciate you having the time as well. And before I get into that, you said something that I'd love to give a little nugget of one of the things that I've learned over time. One of my old partners told me this about truth.
Yeah.
Listen to this. Truth, no matter how little there is in the world, is unfortunately always in more supply than it is demand. What do I mean by that?
Okay, I was going to say, because I could chew on that all day, but unwrap that a little bit.
Okay, so truth, no matter how little there is in the world, and we can all believe, and we all know that truth, there's very little truth out there in the world, but unfortunately is always in more supply than it is demand, meaning that nobody wants it. People have belief systems. People are influenced by whether way we were growing up or what we hear in the news or what we're taught, and we have belief systems. And there are organizations of people out there that influence our beliefs, try to manipulate what we do and work on influence.
That's the truth. That's the truth right there.
Therefore, the truth gets smothered by false facts, false gods, false beliefs, or whatever. They get smothered. It's hard to find the truth. And that's why, it's one of the things I believe about the truth. That truth, no matter how little there is still, unfortunately, in more supply than it is demand. Nobody wants it. I appreciate you talking about that. I always speak the truth because it's easy to speak the truth because no one wants to listen to it anyway.
Yeah.
So we'll just tell it how it is.
No, but you do, though. I mean, you never, folks, I'll tell you this right now. This is why he's on our board of experts, right? And I was stoked when he agreed to do that, because you never walk away from a meeting with Rob Napolitano and go, I just don't know what I don't know what he meant by that. I don't know what he said it, but I'm not sure where he stands on this. You will never say that about Rob's.
You'll know where I stand.
Yeah. So tell him, just give him the brief escalator pitch on the awesome stuff you're doing at Horizons, and then we'll get into the market.
So my holding company, my big company, is Grit Partners, and one of the companies we have under that is Horizon Capital Management, which is what we're doing with private lending here in Charlotte. And one of the main reasons why a couple of reasons why we're doing that. One of the main reasons is obviously Charlotte is got one of the best markets for inbound residents. People are moving here. I think it says 157 people a day. We're one of the fourth fastest markets in the country moving. And there's a lot of growth here. And one of the beliefs that I've always had in the 20-something years I've been doing this is it always comes down to jobs, right? This business in real estate always comes down to jobs. Whether you're renting and you're putting a tenant in place, they need to have a job in order to pay you rent. If you're going to be doing a fix and a flip and you're putting it out to somebody, they always need to have a job to get qualified on the mortgage. So it always comes down to jobs, debt to income ratios, how much they can afford and things like that, sure. But the bottom line is it comes down to jobs. So I love the Charlotte and the Mid-Atlantic regions because you're getting a lot of migration in the country happening, and a lot of people coming to the Mid-Atlantic, and a lot of jobs are coming here. You got manufacturing moving here. They're building up the economy. It's very investor friendly here. So there's a ton of stuff we can do here. And in the end, one of the ingredients that we need that we can't provide is the jobs, and that's already here. So we did Horizon Capital Management for private lending for investors that are, the usual stuff, right? The DSCR or the fix and flip. And we are going to be introducing, I didn't tell this to you, Scott, I'm about to make this announcement. Are you ready?
Okay, here we go. Here we go. This is worldwide right now. Here we go.
We are going to introduce 0% interest. I know he's going to just go blow it. Like, what the hell? You interest and 0 payments for 12 months. We'll talk about that offline and how we're going to do that, but we are going to go and implement 0% and no payments for 12 months.
Okay, I want everybody to, if you're driving in your car, pull over and write that down. If you're somewhere else and grab a waitress, if you're listening to this, in your ear at a restaurant, grab her pen and write this down on a napkin. You heard it here first. You heard it 0% interest and 0 payments for 12 months.
Yes. Okay. We're going to introduce that program along with everything else that we're doing as well, and we'll talk about that, like I said, offline. But at least you mentioned it, what we're doing. That came to mind because that's top of mind because we're working on that program as we speak. So why not just blurt it out to everybody?
Well, that's it. Yeah, just throw it out there. And I know here's the other thing. He doesn't do anything half-assed, folks. So he's already got it done, or else he wouldn't have said it. That I will tell you, because he's probably working on 65 other things that he's not talking about right now. So I appreciate that. But
here's the thing, right? This is why. Let me tell you why I'm doing that. Because so look, private lending, right? It really came into and gained a lot of momentum in the last, 5-10 years, we'll call it, right? It wasn't. And let me say it this way. It was when the institutions started coming into play and securitizing some of these loans. And a lot of that happened after the great financial crisis. Money got away from, typically from residential, and a lot of money went into commercial, multifamily. And then the institutions started coming in, buying loans, doing private lending. So that's kind of developed over in the last 10 years and become a lot more complex. When things get institutionalized, they get more form focused, where they got to check certain boxes and stuff, which leaves a certain segment of real deals and real opportunities outside of that box that I think needs to be addressed. And that's where my thought goes to when I do 0 and 0 for interest and payments. There's a segment that goes outside the institutional box that still needs to have that has opportunity and still needs funding there as well.
Well, absolutely. I mean, I remember we were at an event in Miami. I think it was Miami, whether or Fort Lauderdale, somewhere down there. I don't remember, but he had an awesome car that he rented. Trust me, I don't know. He pulls up in this, I don't know if it's a Porsche or what, and I'm like, what? And he's like, something fun for the weekend. So, but we were talking about the self-migration in this, and even back then, it was talking about the self-migration is the greatest self-migration in U.S. history. And it makes the Dust Bowl look like a birthday party because everybody's following jobs. It wasn't that people are moving from one side of Cincinnati to another. They're picking up and moving down south, especially here, Mid-Atlantic, and then below the Sun Belt, and then out to some of the states in the West because they're following the jobs, right? Because you got to be able to pay your bills. Florida's a little bit different because it wasn't always known as a job creation corridor. And Charlotte wasn't either because it was the banking kind of capital that was already established. But things are kind of changing. But to your point on that, when you saw that, you used to, early on in the business, you had to know a guy, right? Yeah. And then you had to, there was no kind of set rules or whatever. And the box lines now of securitization that people are lending with are very defined. Mm-hmm. And you're right about that. There's so many good deals outside of the perimeter of that box, because there are deals that are going to pencil very well. I think the market, I mean, I want to hear from you, and so do the listeners, because they know what I think already, but the market for what you're talking about is massive, and there's some changes that are coming ahead, and I want you to talk like you do, like a Mike Tyson slip punch to the ribs. Where's it going now in the reality of the situation? Because a lot of advertisers for these, these marketing companies that advertise for these private lending sources, I don't think are telling the full picture. And that's why I wanted to get you on here so that you could tell everybody where the rubber meets the road, right? And so let's hear it, because everybody's on the edge of their seat to go, okay, what's the truth?
The biggest issue today facing the market, it's affordability. So now we go back to jobs, and you layer on top of that the reality of inflation. the amount of money that people bring in from their jobs versus the amount of money that has to go out to pay for food and gas and cost of living,
Right?
right?
Yeah, it's not what
It,
you make, it's what you keep, right?
it's what you keep, and it's been chipping away at that, all right, and that's the reality. And so when we're in the private lending, real estate investing, and all that, eventually we are going to create product for people to live in, for housing and shelter for people to live in. But those people, if you look at their personal balance sheets, that personal balance sheet is shrinking because the jobs and the income they have is not keeping up with the amount of cost of the lifestyle. The cost of eggs go up.
Yeah, that's
And so that's what creates an affordability issue. So now, if local rent is 1,500, but the people don't have the 1,500 bucks anymore because the cost of food and lifestyle has gone up. Maybe they only have $1,000 available for rent and they can't afford. That's the crux of the affordability crisis that we have now because of inflation and because things have gone up. And mind you, things are not going to come back down. That's not how this works. They just stop rising at a fast pace, but they will slow down and flatten out for cost, but they won't come down again. So that means that if we have costs that shot up here very quickly, which is what we felt for the past couple of years, but jobs and incomes only slowly catch up, it's going to take some time, and that's where the affordability crisis comes in, is that spread that people just don't have the money. So what does that mean to us? It trickles down to us that we can't make a buck anymore, because when we're buying stuff at retail prices, at full prices and stuff, that by the time we make money and put a house back out onto the market or rent out on the market, it's too expensive for people. So what do we have to do? There's only two solutions here, okay?
Everybody get your pencils ready again. Here we go. 1, 2. So here he's going to lay it out for you. He's going to lay it out.
I'm going to tell you one.
Yeah.
It comes down to, it's just math. And it comes down to the other side of the balance sheet, your cost and your basis. We got to work on cost and basis. What do I mean by that? Well, if I'm buying, I just looked at a deal yesterday where, and here's the story, right? The story goes that he's a builder. He's not a builder. He's more of a contractor, and he's working with a builder. And one of the guys that he does business with is going to give him a deal. He's going to give him a house to, finish fixing up and get him in on starting his portfolio. So I looked at it, and he wanted to get some lending from us and everything. And I looked at the deal, and the price he's going in at, that's a retail price. I'm like, he's not your friend if he's selling this to you at full price.
He thinks he's getting a deal at a full pop retail type of deal?
Yes, and that's the kind of stuff you see going on. And I'm like, no. I'm like, I get where your buddy's coming from, where he's trying to offload something on his portfolio because it's a dog. But don't for 1 minute believe that he's your friend because he's getting you started in real estate and he's selling you one of his dogs. Here's the reality, okay? The reality is nobody sells their good deals. Everybody sells their shit, okay? That's the bottom line.
That's right. Well, I mean, because if the thing was a cash cow and you were taking money to the bank in a dump truck, you're gonna let it run.
I love it when I'm at a networking event. I got a deal for you. And no, you don't. How do you know? You didn't look at it yet. Because if it was a deal, you'd keep it.
That's right. Yeah.
You wouldn't be selling it.
Yeah.
And so it's the same thing here. When he came to, he's like, oh yeah, my buddy's giving me a good deal to get started. I was like, yeah, we'll see. And I looked at it. No, it's a dog. And it just goes on and on. So what do we got to do? We got to look at how we're buying these things. My view on this and what I've been doing for years, I look beyond the real estate, and I look at the debt, the mortgages, and the mortgage notes. I've been buying paper and mortgage notes for, 10, 15 years now. And I love that side of the business. And so when we do that, we can buy that stuff from the banks at significant discounts. And why do I say that? Because today, the phase of the cycle that we're in a deleveraging cycle. For the past, since the great financial crisis, we put too much debt onto our balance sheets, whether it be for our government in our country, the corporations that are out there doing this, or our personal balance sheets. Everybody's just absorbed too much debt. And we're getting to a point now in the part of a cycle where we got to change that and delever our properties, our portfolios, our government, and all this stuff. And there's two ways of doing that. It's either tightening your spending, and government will never do that, or they're going to print more money. They're going to print more money, which means more inflation, which means we're left to ourselves. We can't print money out of the blue, so we're left to ourselves to figure out, how do we do it? Well, here's how you do it, okay? You got to buy things at a discount. It's clipping coupons again at Wallbaum's. I can't believe that's not even around anymore.
I know, right?
Pathmark and wall bounds,
Yeah.
pulling coupons to go to supermarket shopping. And but that's what you're doing in the business. You're finding stuff on the cheap. And how do you find it on the cheap? It's easier to find debt on the cheap. And if you find the paper at a discount, that's how you get into a basis. So let's look at it this way. So if there was a house, let's go back to yesterday's numbers with the guy that I was talking to. He was selling it for $330. It wasn't worth more than $290. He was selling it for $330.
So he's actually selling it for even more.
Yeah, because he
Wow.
thinks the demand is there, right? And it's like
Yeah.
everything else. It's what people think it's worth versus what it's really worth.
Totally. Yeah. I was talking with Steve Ernest over at Fortra about that on his podcast. And I'm just like, I don't care if you put gold toilets in, it's never going to hit that number. Never.
It's just never.
You could have velvet Elvis paintings on the wall. It's not hitting that number.
Nope. No, well, it may for one person, but try and find that one person, right? Okay.
Right. Exactly. Right. Delusion.
Yeah, and that's part of what we have out there, and that's why it goes back to that truth that nobody wants to hear the truth. Nobody wants to hear it. It's just not going to happen at those numbers. But if we say they take that number, that 330 he was going to buy it, it's only worth 290. It's a truth that he needs to hear. But let's say instead, we went to the bank and bought the underlying note for the underlying note there. That's, I don't know, I'm making numbers up. So let's say if it was 290 there, let's say it was a $200,000 note, and let's say we bought it. Make it up numbers again for 50 cents on the dollar. So if I bought that loan at 100 grand and foreclosed, and I got a basis 110,000 on a property that's worth 285, now I've got opportunity to fix it up and sell it. Not at 285, but I can sell it at 225. I don't rent it at 1,500, but I can rent it at maybe 800 and still hit my numbers.
So I want to bring up a good point there, because you're one of the lenders that will accommodate that type of a deal, right? Where many lenders out in the space will be like, no, we're looking at this and fair market value, and I understand that you got it at a discount. It's almost that these guys are getting penalized, and I'll say the thing, for getting a smoking deal. And then the lender that they go to doesn't really see it the same way that you do. So folks, I want you to know he'll make those types of loans because he appreciates it and understands the micro and the macroeconomics of it. But the number one question that everybody's going to have right now, I guarantee, as they're listening to this, they're going to say, hey, listen, I get it. I understand him. I'm with him. How do I talk to the guys at the bank to be able to get those deals?
That's the number one question I always get. It's relationships.
Right.
They will not talk to you. And I'll tell you why they won't talk to you. Because number one, they have reputational risk. And they will not talk to someone that they do not know or do not trust and talk about some of the problems and the defaults they have on their books. They just won't do it. So it's building relationships. It's building relationships and building relationships.
Right, and because you go to everything, and that's one of your tips that you give to your new guys that all these guys that mentor up underneath you. But and I think that you tell till they're blue in the face, to your point about truth, and nobody wants to hear it. You're out there constantly. You are moving in all these groups. Would you say that that's because everybody's going to say, okay, well, how do I build the trust? How do I get in with these guys? I don't even know where to go.
Yep.
Do I meet them at the country club? Is it a cigar bar? Do I go and walk through the front door, which never works at the bank? How is that? Tell people how to do that, because I know that we're going to get a million questions on this that are going to come through the helpline and all this. They're like, how does Rob do it? How does he do it? And so,
yeah, and you say it, and it still burns my stomach because it's very difficult to do. Bottom line, it's hard to do.
It is.
But if it was easy, everybody'd be doing it.
That's right.
It's the work that nobody else wants to do.
That's right.
Nobody else wants to do. Here's how. Okay, you got to get into the right rooms, and I asked the same questions. Well, where are these rooms? It's hard to find these rooms. So you know what I did? I made my own room. I picked up an office space right in uptown Charlotte, and I sit between the Bank of America Tower, Wells Fargo, Allied Bank, and then Regions Bank is right behind it. So
you're right in the middle of all of it downtown.
I sat right in the middle of the belly of the beast. And you know what I'm doing? I'm having happy hour events. Because what do bankers like to do? They like to drink and hang out and socialize after being in corporate all day long. So I got a great event space. I hired an event coordinator, and I said, if I can't find the rooms, I'm making the rooms. So let me tell you how this is working out for me. I did one event, and one of the people that I brought came over and said, hey, I'd love to do an event here as well. Can we collaborate? Would love to do it. Okay, and it was for a trade association for analytical alternative investment analysts. Okay, great. That's the kind of a room that I would probably want to be with RIAs and financial analysts and stuff. Let me get into the ether over there. He goes, great. Let me bring one of my board members to take a look at this. Okay, so he comes over, and the board member said, this is great. He goes, I sit on another board for the Veterans of Wall Street. I said, what is that? Of Wall Street is a nationwide organization of veterans that work in financial services who help veterans who are coming out of the military to make a transition into financial services. And I said, oh, he goes, we have a local chapter. We're looking for a place to kind of hold our quarterly events. Can we do it here? Absolutely. Now I now host the Veterans of Wall Street in Charlotte. Became very friendly with their president. Okay, and now you'd be surprised at how many veterans are in very powerful positions inside the banks. I invited a bunch of them to my holiday party and just took them to lunch, had dinner, take them for drinks. And all of a sudden they start, you really should talk to this person who really can help you in this bank and in that bank and everything. So I couldn't find the room, so I made one. And
it's like my grandmother always used to say, if you're not getting invited to a party, throw one.
Exactly right. Dude, that is the reality. And it is not easy to do, but that's part of what we're doing. Okay? And we're getting a name out there about, hey, he's got a great spot. He throws on some great events and this and that. And that's, we'll do something for Think Realty. We'll get everybody out here to Charlotte as well. I'll throw an event for everybody at Think Realty. That's fine. Let's just have a party. I mean, look, I'm Italian. I'm first generation Italian. We love throwing parties.
That's it. Everybody's coming over. Everybody's coming
over for Sunday dinner with some meatballs and some sauce, right? Yeah. So that's the way I look at this, is that everybody can come over and we just have a party and let's just go do some business together. Another example from the other side of it. I got a new kid working for me, and I'm not that I'm forcing him, but in order for him to earn his stripes with me, I made him go out and go do door knocking. I give him a list of people that are in foreclosure locally and go out and do door knocking. Okay, he did his first week this week, and he comes in this morning. He goes, I got 2 people that want follow-up meetings. I was like, that's great, 2 people door knocking. And what I explained to them is that this business is not about real estate. It's about people. It's relationships.
Better believe it.
And he tells me, he comes back, we had the meeting this morning. He goes, the one guy walked into his house and, told him we want to talk to him. Maybe we can help him, and maybe we can, and maybe we can't. And the story he told me was that the guy had someone else knock on his door yesterday, wanted to buy the house, and he was about to pull his gun out and put it in his face. He goes, but you asked me what I wanted to do and had a conversation with me, and my guy got invited into the house and stayed there for 45 minutes and had a conversation with the guy, and we're going to go back and go talk to them about how we can help out in the situation. Okay, it's a $400,000 house being foreclosed on for $135,000. There's a deal we can work out. And I said to him, I said, Johnny, the reason why you got that deal and the other guy did, because the other guy treats it as a transaction and you treated that person as a person.
That's right.
That's why we'll find those deals, do those deals, and have a business that no one else will do, because nobody wants to do the hard work and actually knock on doors and listen to people.
They don't. They figure that they can just shoot out text messages and that'll be the end of it. And the leads are going to flow in. Quality leads of epic, deals like this one with a ton of equity gap and, things that guys can just jump right into is a no-brainer. Folks, I'm going to tell you, the old business principles are coming back. I'm
Absolutely.
So happy to see it. And, old is new again. I got a text
this morning from a good friend of mine, because we talk about this all the time. We are at the lowest level of trust in society than we've been in the last 30 years. There's a study that actually goes on, and we're at the lowest level of trust. And so I told that to a buddy of mine. He sends me an article this morning, and I just love the way the article went about the handshake. Not too long ago, when Wall Street traders, commodity traders used to do deals on the floor, that business on the floor moved so quickly that when they did a trade, they reached across the floor on top of everybody else and shook hands, and the deal was done. They went on to the next thing. There was no paperwork right there and then. There's not everything. Your word was your word. And at the end of the day, all the trades got settled. And if you didn't follow up, you wouldn't do business on the floor anymore.
Oh, you're done. You're dead.
And the business was done with a handshake and a look in the eye, and we'll get back to the rest of it later. Let's go do more business. And the handshake is lost. And it's going to come back to that. People want to look people in the eye, and they want people to see who they are and do business with them. And that's the main reason why my guy Johnny actually got in the door yesterday, because he didn't make it a transaction. He made it about, at one point you were making the mortgage payment and someday you didn't. What happened? Maybe we can help. And I always tell them too, maybe we can't. Well, let's find out. Not every deal we can do, and we might not have a solution, but let's have a conversation.
Well, and I say this all the time too, and you know this. People just want help, genuine help, right? It's not some kind of, you draw them in with the thought of helping them, and then it turns out to be something else, and you're standing there, and then you hit them over the head with a hammer with some kind of cheeseball pitch. I mean, people want help, and if you can be genuine in that, everybody, if you can hear anything I ever tell you, be genuine and care about the people, because that's what's lacking. Rob's right.
And I'll tell you why that's a premium today.
Yeah. Premium. I like that too. It is a premium. Yeah.
Authenticity is a premium today. In the age of AI that we're getting into, majority of people don't understand AI and are scared of it. So when you can be authentic, because that's actually how Johnny got in the door. He said to him, "You know what? You're only my third door I've ever done this with, so forgive me if I don't say it the right way." And the guy was like,
"That's awesome. Good for him.
Come on in, buddy. Come on in,
Good
buddy."
for him.
Exactly.
You know
That's what I
mean?
said. I said, dude, because he wanted to know, oh, what should I say? I said, just be yourself. And I don't care if you tell them this is the first time you're doing it. And he did.
And nobody does that anymore. I mean, it took me years to have the courage to tell somebody, yeah, I don't know about that. I mean, I was so afraid of looking like an idiot and a moron that when I finally grabbed onto, hey, I'm just a guy like you. I don't know. I'll find out for you. I'll get the answer. I did a whole thing on that about having the courage to say you don't know.
Yeah.
And it's amazing, you guys. What Johnny did there is just his genuine self in telling people that you don't know, or you're going to figure it out and you'll come back to them with a real answer. That is worth its weight in titanium, platinum, and crusted gold. I don't know where it is right now on the stock market, but whatever's the most value, it's that, right? So
people want to make authentic, real, especially after we've been in COVID. And everybody's been pushed to, having meetings like this digitally and all this stuff and everything, right?
Yeah.
And everybody gets on, and gets dressed up on the top half and the bottom half and got nothing on.
I'm wearing flip-flops right now, so it's good. It's all good.
And that's the thing, right? So why do we still just wear a t-shirt then? If we're wearing shorts on the bottom, just wear shorts on top. Everybody knows. Everybody knows anyway.
Yeah.
But authenticity is a premium today. Talking to people, and this business is about people. One of the other things, the other deal he got, he walked up to knocked on the door, and the woman just doesn't want to be in Charlotte anymore. Her aunt was here, her aunt died, and she's got family elsewhere. Another $400,000 house with $130,000 foreclosure going on. Okay,
Wow.
So what's keeping her here? Just some moving money. Okay, we can supply that. If you don't want the house anymore, sure, absolutely. We'll take the house. We'll give you some money for it, absolutely. We'll help you move. We'll do whatever. There's all sorts of things we can do creatively to help you. But it is a business about people.
Well, you as a direct lender too, and I think with all the different investment vehicles, you've got probably, I think, 7 different verticals going on, and then you just announced 8 here today. So you have the ability to pivot, which I always talk about with everybody is the most important thing in this business, right? Because, asset classes get hot, and they get cold, and you got to be able to jump and navigate through that. And you set yourself up to be able to hit anything that comes down the pipe, obviously. But so we're coming up on time here. Where is... Man, because I could talk to you, I could talk to you for 25 hours straight. For today's session on this, because everybody's going to want to know where's the new bullseye target, right? What's the biggest glass, the cheapest beer, as I always say, for the asset class they should be focusing on?
I look at it this way, and instead of giving you the fish, I'm going to teach you how to fish. Here's my answer.
Sure, right.
First off, anybody that tells you what's coming and where to go make money, they're full of shit. No one knows. Okay? Including this guy that's about to tell you what I'm about to tell you.
Yeah, right. Yeah.
I just happen to be right most of the time.
You usually hit it. You're very. If you're not, you're hand grenade close, right? You're gonna do some damage.
But let me tell you how I think about it, and give that. To you got to think of it in a mosaic, right? So you got to look at different data points and where you think it's going. So that means I look at migration patterns, right? So I stay away from
love that. Yep.
Stay away from blue states because they're going to shit and it's not time to invest in them. There will be a time in the future when they turn their ship around, but I don't think it's going to be any time in the near future. Yeah. So you stay away from the blue states, right? So you look at migration patterns, you look at where the jobs are, you look at where lifestyles are, okay? And you look at where new opportunities are, growth cities and growth and smaller cities. So like I said, I'm in Charlotte. Spartanburg's not far from me. It's going to be booming there too. Greenville, South Carolina is going to be booming.
Yeah.
Charleston, booming, right? So you got all these
Even up by the lake, they're developing. For those of you that don't know
all
about Lake
sorts of
Norman
stuff.
North,
Yeah.
up there, phenomenal area right now, you guys. I'll say
So
it.
and that's it too, right? So people looking for experience in hotels, not in hotels, hospitality, right? When they're
Hospitality, yeah.
travel and hospitality, people looking for experiences, ton of opportunity there as well, right? So I think you look at geographically where you are and where you can operate. I think there's opportunities in everybody's backyard. Okay, no matter where you are. So you got to look at that, look at migration patterns, look at where jobs are going, and look at a bunch of different things. I personally also look at debt levels. Debt is very important. I think in the debt cycle, we're going to have to go through deleveraging, and in certain parts of the country, and I think in most of the parts of the country right now, I think we're going through part of the cycle where I'm not a big fan of owning real estate at the moment. I think, and this is my opinion, this is how I see it. I wrote an article probably about a year or so ago, and I did it on purpose as shock value, and it shocked the hell out of a bunch of people. I got some bad.
Oh, you? No, really? No, I'm
And
surprised by that. Yeah.
And what I did, the article was owning real estate is a trap, and people came, I own this money, I'm making money, and my point of it was, it's a trap because I look at it this way. This is my opinion. I could be wrong. When we're in a country that's over levered, right? We're at 125% of GDP. We're in the
That's crazy. Yeah.
It's crazy, right? So where are they going to come up? They want to tax the rich. They want to this and that. Who are they going to go after? I think it's going to be the landlords and the real estate owners. How are they going to do it? It's going to be through property taxes. How are they going to do it? Through the insurance companies. And I said that about a year or two ago. And what's happening now? Taxes have gone through the roof, and insurance costs have gone through the roof.
Yeah.
Right? So now the
insurance is, especially down here in Florida, it's
and so the cash flow, the positive cash flow that you had before is now being eroded because you have a domain of people in the government that actually can poach that. And that's why I said owning real estate is a trap. That's why going on to the debt side in this part of the cycle is where I think, that's just me, I like the debt side of the business at the moment because there's going to be a lot of distress that you can pick up at big discounts. And then it's going to get to a point where that'll bottom out and we'll get back up onto the cycle of prosperity. And that's when you want to get into the real estate side because then you'll get all the appreciation and all that stuff going there as well.
Totally.
So that's just what I see. And this is just one other guy with one opinion. And it's like they say, we've all got one, like the other thing too.
Yeah, well, but I'll tell you, it works for you and you're able to actually do it. If you get anything from Rob, it's that he educates himself.
Yeah.
He's not waiting for anybody to come and knock on his door and say, hey, did you want some fairy dust sprinkles of ungodly intelligence or whatever? You're going to have to go get it.
Yeah.
Nobody's coming, folks. Yep. Nobody. So, but to Dana White's thing, if you just go out and do it, you'll get 75 exits ahead down the freeway if you just roll your sleeves up and get into it. And so that's why I always love talking with you.
And I'll leave you with this. We'll end on this, right?
Yeah. Here comes a big dismount, folks. Here we go.
Exactly. Here's the big dismount. Many times when I was teaching this stuff, I would put a slide up on the board and it had the word success, and underneath had the word failure, and it was split by a line. And I would ask people, you know what the line means? No. What does a line mean? Okay, so that's the distance between success and failure. It's that thin of a line. That line is called execution. The difference between success and failure is execution. Don't go out there and analyze and pre-plan. Just go do. That's the difference. Just go do. Execution is what's missing out there. It doesn't matter. It might not be the right one. Just go do. It doesn't matter if I could. Just go do, because you don't know what's out there.
That's right.
The difference between success and failure is that one thin line, and it's called execution.
I'm gonna steal that. I'll give you credit, but I am gonna steal that from you. I'm gonna put that everywhere.
Okay. Spread the word, man, because that's what it is.
I will.
It's execution.
All right. Well, then as we're jumping off here, how do they get a hold of you? Because I know that people are going to want to be like, I want to talk to that guy.
It's the easiest for me is on LinkedIn. You can go to LinkedIn, and I am the real Rob Knapp. You'll see that on there. The website is gritrust.com. There's a page you can reach out and.
But with only one T, you guys, because I made that mistake myself.
So GRIT is an acronym for Global Realty Investor Trust, but we could not get GRIT So I couldn't get Grit Trust, so it's just GRI Trust. Look, and I got trust in the name too. See, because that's what
Let's see. There you go. Right. I mean, it's that easy. So look him up on LinkedIn. You guys will see a lot of him this year because he's on our board of experts, and he's gonna, you'll see his writings and stuff that we're putting out there, the newsletters and everything. So don't worry, you're not going to lose track of him. But if you do want to talk to him, you can always get a hold of him. I will tell you that. He loves this stuff like I do, and is just really happy. Like he talked about, would rather teach you how to fish than to give you,
I'm a big believer in teaching people how to fish. Absolutely, because I believe if I teach you how to fish, you'll come to me for the bait. We both run.
Exactly, and the boat rental, knowing you, and then you're gonna the poles and everything else. So
and we make money together. That's how I like to do it.
That's it. All right. Well, thanks, brother. I appreciate it. Until next time, we will see you guys on the Think podcast. But thanks, Rob. It's always a pleasure. All right, brother.
Yeah, you're awesome, man. I appreciate it.
Thanks, man.